our slogan, we have to keep it simple and clear, right? So in this particular strategy, we are going to be using just 3 concepts. Okay, so first off, we want to see the direction of the market. We want to see the price creating maybe higher lows and higher highs this way to the downside. Okay, for a downtrending example. Okay, so we want to see something like this, the price creating higher lows and lower lows and lower highs, sorry. Okay, now for an uptrending example, we want to see the price creating higher highs and higher lows. Okay, so we want to see the price creating this. So for a downtrending example, you have to just connect your trend line this way. Okay, then you can equally do this towards the downside, giving you a channel. Okay, so for this particular one, you can have to connect your line also towards the upward side. Okay, so now when you have something like this and the price is right here, you expected to buy here. You expected to buy here. Okay, and you expected to sell right here, and you are targeting this. Now this is just the setup. This is just the setup, as simple as this, but you have to make sure that you are making the right entry. Okay, so this is the setup, but the entry now is the thing that is going to beautify this particular setup. So what are the things you are going to be looking for in order to make entry right here when the price bounce back to this trend line or bounce back to this trend line? Which one? So if you are selling, what are you looking for before you sell? And if you are buying, what are you going to be looking for before you buy? But this is just the simple setup. Okay, now we are going to be looking for the entry strategy. Okay, we are going to be looking for entry strategy. Now we are going to be using the concept of fair value gap. Okay, we are going to be using imbalance in the market. Okay, so you already know what imbalance is, but if you don't know what imbalance is, it's simply we are talking about 3 consecutive candles. Okay, when where the middle, the candle in the middle, or the second candle so if you don't know what fair value gap is, a fair value gap is simply 3 consecutive candles where the first and the last candle, okay, fail to overlap each other. All right, fail to overlap each other. So let me just show you a clear example. So look at these particular candles. We have 1, 2, 3 candles, 3 bullish candles right here. So you can see this is the high of the first candle. Okay, this is the low of the third candle, which is here. Okay, you can see that the low and the high of the low of the third candle and the high of the first candle did not overlap. Okay, so here we have market gap. Okay, we have a gap here, so the price will always come back to correct any gap. You can see how the price just pushed back to correct this gap here. So if you look here, we also have a gap. You can see between here and here, so you have a gap. You can see the price still push all the way to the downside to correct this gap. So each time the price creates any gap, the price tends to come back to correct the gap, right? So you can see we have a gap here and all that. So you need this concept while taking this particular setup. Okay, you need the concept while taking this setup. So before you make your entry at this point, before you sell here, you want to make sure that you have market gap here, down here. You want to make sure that you see gap down here, so that if you are making entry here, you're actually making entry based on trend line, but your expectation is that the price should push back to correct this gap created down here, right? The price should push back to correct the gap. So in the process of correcting this gap, okay, you are actually going to be hitting your TP. So that's the concept. So you want to make sure that you see a market gap down here, or fair value gap, all right, down here before you make your entry. That's how simple this strategy is. Okay, so I'm going to be using this live example to share. Let me delete this. So this is live chat. Okay, so I will just simply connect the lows. Okay, hope we are good. So can equally connect these highs this way. All right, now if you look here, the price at our trend line, which is the point we are going to be, the area of interest or key level where we are going to be looking for opportunities to buy, right? But another thing that is going to help us make our entry is this particular gap. So the price, the price have already created this imbalance here of a value gap above here. So we are hoping that the price is going to bounce back to correct this gap, right? The price should bounce back to correct this gap. So in the process of correcting the gap, we are likely going to be hitting our TP. So this is going to be my entry, this is going to be my TP, and below here is going to be my stop loss. So a few pips below our trend line is going to be the stop loss level, while the fair value gap above here is going to be my TP. This is how simple this strategy is. Okay, you just have to keep it simple and straight. So if you look here, we have the same thing here. So you can see we had a gap right here. So for instance, you can actually make an entry below here, which is this point. You're going to be making your entry here, and your TP is going to be at that fair value gap above there. So this is going to be your TP level, and your stop loss a little bit below the trend line. So after that, we have a gap right there. So after this one, you can actually if you check closely here, we don't have any gap here, so we are not going to be making entry. If you look at this, let me just so if you look at this zone, there is no market gap at this level. Okay, so we are not actually doing, so there was a gap here anyways, but the price have corrected the gap in the process of pushing towards the downside. You can see the price created a gap, then push back to correct the gap before getting to this level. So assuming this gap was not corrected, we are going to be making entry here, but the gap is already corrected, so we don't have any gap here that will actually help us to make entry here. So there's no entry here. We had the first entry, there's no entry here. Then look at the second entry here. Okay, so we are expecting the price to push up and correct this gap. So that's how simple this strategy is. You simply want to connect your trend lines, wait for the price to come to your trend line, then look above and check at the key level above. For this particular one, you look at the key level, which is this key level, and check if there is a gap towards that level. And you can see we had a gap, and the price is actually possibly going to push back and correct the gap. So that's exactly how this strategy work. I hope this is helpful. I hope you are going to try this out. I'll see you guys in the next one. Bye for now, guys. Enjoy.